Hey everyone, welcome back to our channel. Today we've got something super exciting for you. If you are new to the crypto world and wondering how to make your investment work harder for you, you're in the right place. We're breaking down the ins and outs of building a diverse crypto portfolio that's aimed at bringing in those high returns we all dream about. Trust me, navigating the crypto landscape can be tricky, but with the right strategy, it's totally doable. So if you are ready to level up your crypto game, make sure to smash that subscribe button and join our community. Let's dive into it. First off, understand that investing in crypto carries risk. It's important to assess how much you're willing to risk. Remember, the crypto market is volatile with cycles of bull and bear market. Knowing this helps you navigate the ups and downs. Bitcoin halving events are key market movers affecting not just Bitcoin but entire crypto market. These cycles are your roadmap indicating when might be a good time to buy or sell. To provide specific dates and detailed analysis on Bitcoin's performance after halving events, it's crucial to examine historical data. Typically, Bitcoin halving occurs approximately every 4 years, with past halvings in 2012, 2016, and 2020. Following these events, Bitcoin has often seen substantial rallies, as you can see in the chart. For instance, after the 2016 halving, Bitcoin experienced a significant increase in value throughout 2017, reaching an all-time high by the end of that year. Similarly, after the 2020 halving, this was a notable rally into 2021. These patterns highlight the impact of halving on Bitcoin's market value. As you can see in the chart, Bitcoin hits its lowest point in November 2022, reaching the bottom of its cycle. This period was identified as an excellent opportunity for investors to buy Bitcoin at a lower price. Similarly, altcoins were also available at discounted price, presenting a prime buying opportunity for those looking to diversify their cryptocurrency portfolio. Such historical lows have often been considered strategic points for entry into the market, reflecting on past cycles' behavior and the potential for future recovery. If you've missed the bottom in November 2022, it's still a good time to enter the market, as we currently in the accumulation phase according to the chart. This phase presents an opportunity for investors to build or expand their portfolio before the anticipated upwards trend began. Accumulation phases are generally seen as periods where savvy investors gather assets at low price, preparing for the next cycle of growth. Making informed decisions during these times can be crucial for long-term investment strategies. Also, as you can see, this website is very helpful, as it provides a countdown of the Bitcoin halving, offering a visual clue for the timing of this event. This facilitates a greater understanding of when the halving will occur, highlighting its importance for those tracking Bitcoin market dynamics. Let's move on to discussing what can trigger a bull market narrative for a coin, token, or project, leading to a parabolic gains. As seen in 2023 was the year of AI, with technologies like ChatGPT leading the charge. AI tokens are now trending, offering unique opportunities for growth. Additionally, the tokenization of real-world assets like real estate introduce a new way to diversity. Leveraging this data allows us to make informed choices about which projects we are willing to invest in, considering factors such as technological advancement, market trends, and potential for growth. Cryptocurrencies can be classified into three main categories based on risk-reward: low cap, mid cap, and large cap. Low cap crypto, while offering the highest potential reward, carries significant risk. Mid cap crypto offers a balanced, potentially yielding lucrative returns as the market expands. Large cap crypto includes the top 10 market cap, like Bitcoin and Ethereum, provides more stability and solid gains. making them a safer bet for investors. There are many ways and strategies for crypto portfolio, but there is no perfect strategy or perfect portfolio. However, for beginners, a simple strategy like the 40-30-30 approach can be an effective way to balance risk and reward. Here's how it breaks down. Remember, this is just an example. Do your own research before investing. So allocate 40% to the top large crypto by market cap. From this 40%, you could allocate 25 to Ethereum or Solana and 15 to any combination of XRP, Cardano, Avalanche, or Chainlink, or any of the projects with over 10 billion market cap, depending on how much you are willing to invest, as these are well-established projects offering a safer investment compared to other crypto. So the remaining 60% would be spread across a blend mid and small cap altcoins. For example, 60% in mid caps, 1 to 10 billion market cap. For instance, Polkadot with 9 billion market cap is blockchain protocol designed to facilitate interoperability between different blockchains. One of its key objectives is to enable different blockchains network to communicate and share information. Hence, investing in these projects can offer several potential benefits, knowing that it's led by a team of experienced developers and researchers, including its co-founder, Dr. Gavin Wood, who was also co-founder of Ethereum. We'll go deeper on how to select a project in the next video. Allocate the remaining 30% into small caps with 1 billion or less by market cap. These carry medium to high risk, but hold the possibility for huge gains. It's also very important to diversify across different sectors. At the time of this recording, the most trending categories include the Solana ecosystem and inscriptions, with the latter referring to embedding of images, videos, audios, and text directly on the Bitcoin blockchain. Gaming and the metaverse continues to be a leading trend, especially with the launch of Apple new Vision Pro. This move could greatly influence the gaming and metaverse markets, offering fresh investment opportunities in the space. Alongside decentralized physical infrastructure network, aka DPINs, which are blockchain-based initiatives focused on developing and maintaining physical infrastructure through token incentives, covering areas such as power grids, file sharing, cloud networks, mobility solution, and wireless network. When constructing your portfolio, consider a mix of established projects and newer emerging ones, without overlooking the importance of Layer 1 and Layer 2 infrastructure projects. This approach not only ensures a broad exposure to potential growth areas within the cryptocurrency space, but also balance risk across different investment types and market sectors. This strategy, while opening the door to significant returns, also exposes you to a balanced risk portfolio, fitting different investments objectives and risk tolerance. In this video, we've guided you through strategies for building a cryptocurrency portfolio. However, if you're interested in learning how to select a particular project, how to research it, and what our recommendations are, stay tuned for the next video. We'll dive deeper into these topics to help you make informed decisions in the world of cryptocurrency investing. Before you go, let us know in the comment what strategy you're following, or if you've come up with an innovative approach for your investments. We love hearing from you and learning together as a community. Until next time, invest wisely and stay informed, and see you in the next one.